An ETF, or exchange-traded fund, is a type of investment fund that trades on stock exchanges, similar to individual stocks. It is designed to track the performance of a specific index, sector, commodity, or asset class. ETFs have gained popularity because they offer diversification, flexibility, and liquidity to investors. Here's how ETFs work. Composition. An ETF holds a basket of assets such as stocks, bonds, commodities, or a combination of these. The assets held by the ETF are intended to replicate the performance of a specific index or investment strategy. Creation and redemption. ETFs are created and redeemed by authorized participants, typically large financial institutions, who assemble or disassemble the underlying assets of the ETF. These authorized participants exchange the assets for ETF shares, either creating new shares when demand is high or redeeming shares when demand is low. Market trading. Once the ETF shares are created, they are listed on a stock exchange, allowing individual investors to buy or sell them throughout the trading day, just like individual stocks. The price of an ETF share is determined by the market based on supply and demand, and it may trade at a premium or discount to the net asset value of its underlying assets. Tracking the index. The ETF's objective is to track the performance of its underlying index or asset class. The fund manager aims to replicate the index's returns by holding a similar portfolio of assets. The fund may use various strategies to minimize tracking errors and ensure that the ETF closely mirrors the performance of its target. Benefits of ETFs. Diversification. ETFs offer exposure to a diversified portfolio of assets, reducing the risk associated with investing in individual securities. Flexibility. ETFs can be bought or sold throughout the trading day at market prices, providing investors with the flexibility to enter or exit their positions at any time. Lower costs. ETFs generally have lower expense ratios compared to actively managed mutual funds because they aim to passively replicate an index rather than employing active management strategies. Transparency. ETFs disclose their holdings on a regular basis, allowing investors to see the assets held by the fund. It's important to note that while ETFs offer several advantages, they still carry investment risks. SPY is considered the most reliable and safest investment in the stock market, with a historical annual performance is around 10%. There are also some leveraged ETFs such as ProShares Ultra Pro TQQ, which is the most popular and liquid ETF in the leveraged space. With assets under management of $11.4 billion and an average daily volume of 172.7 million shares a day. Investors should carefully consider the ETF's investment objective, underlying assets, expenses, and their own investment goals and risk tolerance before investing. Please check out our channel for more videos about the stock market.